TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, folks, good afternoon. This will be my last show until next Wednesday because we have a holiday on the 21st. And since I wanted to talk a little bit about cycles this morning because we have something important, I think, occurring tomorrow. If you over the last few weeks, I've said that the 14th to the 18th this week would be the really key week in the stock market, that this should be an area where we're getting ready to turn. On yesterday's show, I posted the thing from Zero Hedge that showed the work that Tom DeMark did just using Fibonacci contraction cycles, showing that he was looking at the 22nd to come in. So we have some, mathematical things there. We have some astro things that are there. But the astro thing is it's combust. That's basically when Mercury is conjunct the sun. Now, remember now that the moon is not a planet. It's just a satellite. So when we have a full moon, which means that's a opposition when one's on either side, but when we have a new moon, that's a conjunction starting at 0. So we have Mercury at a conjunction, to the sun, and that's called combust. It was done by a man named T.G. Bhutani. He was an Indian astrologer, back in the 40s. Very little was written about him. I have a few books that he did, but it was all pretty much Vedic astrology, which is like Hindu astrology, and it's very, very different than any other type of astrology. They're supposedly come up with the same types of ideas, but it's over my head. Folks, all I've done is just look at the dates and tried to go back and look at history to see if they worked or not. That's really all I've done, and they don't work all the time. If you can get them to work 6 or 7 out of 10 times, that's pretty good. That's a very good thing. And combust happens to be one of the better ones. So combust is basically like a super full moon is what it's like, because you have Mercury, which is our smallest planet, the one nearest to the Earth. And so what the thing that you want to be watching is the fact that we have a situation where it's starting out at 0 degrees against the sun. Now, there's an interesting thing that's happening, and this is why I wanted to talk a little bit about the cycles, because we have in Dr. Andrew Lowe's book, he wrote a book called The Evolution of Technical Analysis. And Dr. Lowe, of course, runs the Applied Mathematics department at MIT. He does genetic engineering for, trading systems and things like that. So he's really heavily involved in Wall Street. He has a $3 billion hedge fund himself. And so he does a lot of research in this area. And then the first 50 or 60 pages of that book, The Evolution of Technical Analysis, he talked about, how the original technicians, were the people that were using astrology, the Babylonians back in 3500 BC. And he has pictures in there where there have been etchings on the rock showing how they're looking at the planet Mercury and how it's trying to predict, and with pretty good success, of what the wheat crop was going to look like, back in Egypt, 5,000 years ago. So, that's some of the, the evolution of the stuff that, we're looking at. I don't want to go quite that deep, but what I did want to do is to tell you what's happening over the weekend. We have a situation where we have Mercury, the Sun, and Mars. All of them are moving into the sign of Aquarius. Now, this is where astrology lost me, because when you look at the dates, I can understand the dates very easily, but when you start looking at houses and signs, these are mythical bands that are over the earth, supposedly, and believe me, from what the astrologers talk about, they certainly do exist, because they've been there for thousands of years. They've been talking about them. So they must have some importance, and Dr. Lowe had a great deal of it in the book. But the signs, there's 12 signs of the zodiac, and you want to know right now if you're a Capricorn, you're looking because this is January. I happen to be a Leo, so that's July, and then there's the houses. I believe there's 10 houses along with the 12 signs. I hope I'm right on that one, but I don't really use it, so I don't know. But I do watch the signs, and the reason why is in 1987, on August the 25th, the stock market topped at 2,700 in the Dow, and in the next 6.5 weeks, it went down to 1,600. It dropped well over 40% in a matter of just a few weeks. Of course, one day it was 16%. That was October the 19th. But on that day, you had 5 planets that were all at 0 degrees. In other words, they were at a conjunction, just like we have now with combust. Now, right now what we have is we have 3 planets. We have the planet Mercury, then we have the Sun, and we also have Mars are in the sign of Aquarius. Now, that's important because when these things line up in the sky, they look a little bit differently than they do if you're looking at them on a piece of paper. If I could take you back several thousand years ago, if you remember out of the Bible, there were these 3 guys on camels, and they were looking for a bright star to lead them to Bethlehem. Well, the bright star that they were looking at was a triple conjunction of Mercury, Venus, and Mars. And when they're lined up together, conjunction means they're like little bowling pins. It makes it very, very bright. Well, if you went back into the, used a computer and went back to see when that triple conjunction occurred, you realize it happened to be in the month of October, not the month of December like when we celebrate Christmas. So now we have a situation where we've got these signs going into Aquarius, and we have combust happening tomorrow, and then we have 2 other things that occur over the weekend, and then we have the holiday, and so we're going to come in Tuesday, and I'm expecting to see some pretty good fireworks. We'll have to wait and see because we have all these gaps, on all the charts, and almost everyone is bullish now. I mean, it's just a matter of how high it's going to go, and if it's ever going to correct. We'll have to to wait and see. But we're watching these particular events that will be occurring starting tomorrow. That's when combust starts. And it has a very high accuracy rate. I believe Steve Rhodes has published a lot of things about combust, which is Mercury conjunct the Sun and Mercury conjunct Venus, because Venus and Mercury go back and forth so quickly that you can have a combust with Venus and also the Sun and Mercury and the Sun. So both of those connect, to make a cycle. That's what we're looking at. This happens about 4 times a year, which is, it could be a 3-month cycle. I don't know. All I know is that it moves in Fibonacci spirals. It doesn't move, in static cycles like 18 days, 36 days, 72 days. It does not do that. It moves in Fibonacci spiral days. I've had a bad cold, so I'm trying to get over this. So I want to get to the technical part of the commodity letter because we got a lot of things happening today in the commodity market. One we've been expecting, and that's the gold market. We'll cover the gold market right after we get back from the break. But I wanted to give just a little bit of educational background here in one of these commodities. I'm going to put up the March corn chart, and it shows that buy that we were looking at right into the crop report that occurred, about a week ago, and it was a very bullish report, and the market rallied exactly to the 61% retracement of the high we made in December. It's perfect 61% retracement. So what we're going to be looking for is we're going to be looking for a pullback where we could probably buy corn and not risk very much at that point. But that'll take, we went up about 9 days, so we figure there'll be a 3 to 5 day correction somewhere along here, and it'll give us a chance to enter the corn at a low level, much like we had going into the crop report, because that was setting exactly at the 61% retracement into the crop report. I mean, it did everything that you could possibly do, to make it look, tempting to be a buyer. And I'll put the chart in on that day, and you'll see that on the day of the report, which came out during market hours, which was highly unusual, the market went down to an exact 61% retracement. It hit it twice in a 2-hour period, looking at the 60-minute chart, and of course it rallied well over 50 cents a bushel, which was $2,500 per bushel. So this is what we're per contract, not per bushel. So this is what we're looking at as far as corn. Is we'd like to see a pullback come in somewhere around the $7.05 level, $7 somewhere in that area is what we'll be looking at in corn. But I want to bring out if you'll take a look, and I think this is important because people get a little confused sometimes when they look at these ABCD patterns and Fibonacci numbers and stuff that we have, because the ABCD pattern itself, and then Steve talks about this all the time. Basil talks about it, Tom talks about it, but it bears, and it's worth talking about it because the actual perfect ABCD, where AB is equal to CD in time, only happens about 40% of the time. The rest of the time, the CD leg is going to be a 1.27 or a 1.618 expansion of the AB leg. In other words, AB moves up, and the CD leg will be 1.27, 1.618, or 2, or 3.14. And when they go really crazy, they can do anything. So you just have to realize that you're always dealing in probabilities. And that's the whole premise of what we're looking at. I'm bringing this up because I'm trying to give a little prelude into what happened to gold this morning, because we were talking about gold yesterday. It did exactly what we hoped it would have done, and then today it went down and fulfilled the objective that we talked about, and that was at that 1662 level. We'll talk about that after we get the break. But I just wanted you to get a chance to go into the Tiger TV and see how these different ABCD patterns move, because the whole key to trading ABCD patterns and how you make your living is what happens at point C, because when point C occurs, that's telling you what B is going to do most of the time. Because if the market goes down to point C and then explodes up to the upside, you can say that it's going to be an expansion of the AB leg. It's going to be either 1.27 or 1.618. So that's all I wanted to do as far as tell you about the what I think is an educational thing that is relatively important, because many people fail to take that into consideration. They think that all ABCD patterns are going to be equal, and they certainly are not. It depends on how they come out of the C leg. Okay, nobody told me about the break, but that's okay. I'll be all right.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. If you have any questions, it's 877-927-6648. And I thought we'd have a little bit of fun here today and maybe make a few bucks. We have a pattern getting ready to complete in the E-mini S&P 500. We're making a new high right now, and the butterfly completes at 1477. And that'll be an ABCD pattern, and it will also be a butterfly pattern at that time. That doesn't mean that it's not going to go charging ahead by a long stretch, but this is where the pattern is. If you were to do this trade, you would want to be putting your stop about 4 points away. So your stop would be at 1481. We've got a half hour to go. This is a 5-minute chart, so we're going to have probably 5 or 6 bars, to look at this. So we'll see how the pattern works this time. But this is a textbook pattern on a 5-minute chart. And we see these all the time. They're not they're not hiding anywhere. They're there all the time. Someone asked me a question about Apple. Whether I thought Apple had made a bottom. Well, it's made some kind of bottom, but I don't think it's the bottom. I still believe Apple is going to $3.95 a share. If we get above 560, which is a good 12-15% from where we are right now, then I would be wrong. But to me, nothing has really changed. It's had a oversold condition, of course, and they've corrected that a little bit. But it looks like it wants to make that ABCD down at the 395 level. That's the way that's the way I see that. Now, I wanted to add one other thing that's happened in the commodity markets. And since this is a commodity show, I wanted to show you something that happens. It happens in stocks too, but for some reason, we have a a lot of volatility in the commodity markets, more than we do in the stock markets. And so there's a pattern that is really quite interesting. And this was brought to my attention by Jim Twentyman about 40 years ago, and we have it going on right now in the soybean market and also the soybean meal market. And I'm going to put the soybean meal into the Tiger Den. Now, those of you that don't trade commodities very much, soybean meal is one of the two byproducts of soybeans. Soybeans are crushed. The little beans with 3 pods in it are crushed into meal, which is about 80% of the bean, and the other 20% is the soybean oil. That's the stuff we use for cooking oil and paint, and there's so many uses, it's unbelievable. But it's margarine and all that other stuff. The meal part is almost primarily used for feeding hogs, cattle, and chicken. And so that's what we're looking at. But what you're going to look at here in the soybean meal is you're going to be going back over a couple of years, and you'll see, that the market had made a high, way back in 2011, and then in 2012 it came back and touched that high one more time before it took off on the worst drought of the last half century. And then what's happened on the correction that occurred just recently, it's come down and touched that exact same price again. And so this is showing you why these things return to these levels. I'm not sure. But, they do return, and if you're watching them, you want to be able to identify that, because you'll say that sometimes these things act as catapults. In other words, once it hits that price, it gets thrown back upwards. And, that's what's happened so far, with the grains, with this bullish report that we had last week. And so that, whether that's going to continue on or not, I'm not sure. But this is just a technical thing that looks, you don't see it often in stocks, but you'll see it more and more in commodities. That's not a fair statement, because I don't look at a lot of stocks. Everything I do is in Forex and commodities. I imagine it happens in stocks. I'd have to ask Basil, because he would know. But when they return to these old highs and lows, I know it means something in commodities. Whether it does, in the stock market, I don't know. But this is the example that I'm showing you in the soybean meal, is that we've come down to this level and hit it, exactly, to the same penny. And to be able to do that, a year later, that's almost mystical in my opinion. But that's just my opinion, of course. Anyway, that's what we're looking at with the soybean meal. When we get back from the break, we have to talk about gold, because we are very close to moving on. Wow.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I wanted to talk about the gold market. We talked about it yesterday. We talk about it every day because I think that's the one that, it's so easy to trade. I just don't understand why people don't see this. We talked about it yesterday, the fact that we thought that gold would hold the 382 level at 1673, and it needed to get above 1690 to get moving, and it did not do that. And then today, right after the news announcement, whatever it was, gold broke a quick $20 per ounce and stopped exactly to the exact penny of the 61% retracement of the low we made on the 11th of January. That was the predicted low. We talked about that yesterday, that if it broke the 1673, it was going to go down to the 1666, and it hit it. So all we need now is to gold to get above 1690 on a closing basis, and then it's got a really big chance to move because we're taking out the 61% retracement that we made over the last 5 or 6 weeks, on the daily basis. So gold is beginning to look more and more bullish if we can close above 1690. Now we've got half a day left here, Yay's in session, and then we got all day tomorrow. So we need a good close on Friday for gold to get moving. And if we get if you're bullish gold, the ideal situation is that you would get a really strong close where the market's up around, $15 or $20 and leaves a, what we call a wide-ranging bar, and that would tell you that, yes, it is finally breaking out after making all of these higher lows, over the past, 7 or 8 months. But it still looks good. The open interest statistics in the silver do not look very well. They're a little better in gold, but the ones in silver don't look too well. And they're also, the silver is not acting nearly as bullish as the gold is. So that's another thing that you have to at least be a little bit caveat emptor on this. Buyer beware, because we have to get this thing moving. Now the good part about this is after we made the low at 1666, this market has not given back more than $2 the whole day. In other words, it rallied $22 an ounce and has not backed off at all. And so that's a really positive sign from the bullish part of gold. So if it can maintain that and close strong, this would be a potential for a pretty good breakout, because the fact that it made the 61% retracement of yesterday's low is very important. And then to close above yesterday's high, which we've already taken yesterday's highs out, so we've got an outside day moving, which is, you take out the high and the low at the same time. And if you close strongly there, that's a bullish engulfing line, a bullish engulfing bar, and that would be also some positive things. But, we've been bullish gold for a long time, and it's still got a chance, to really run here, because if we get it above 1,700, I think the move between 1,700 and 1,800 will not take very long at all. But we'll have to see if that does occur. I frankly, I like to look at gold on a 30-minute chart because it's so easy to trade. The fills are just really fair. It hits the numbers almost, almost like a micron scale. It's just right to the money. I mean, right to the 1.27, or the 618. But you have to be able to prepare yourself, for these numbers. You've got to be able to say, okay, if it gets to this level, I'm going to have to be a buyer, because today, all of a sudden, all my alerts went off in the gold market, and I didn't know what was going on. I didn't know there was a report, but the next thing I knew is that we went through, 1673, and we dropped a quick $7 down to 1666, and before you could, change your hat, it was already, up on the day. So it was telling you that there were a lot of buyers down there wanting to buy that stuff, below 1670, per ounce. So that's what it looks like to me. Gold does look, very, very bullish. The grain markets still look bullish. Wheat, corn, beans, they all, still have positive biases. Longer term, they have, higher bottoms, and all of that makes it look, very, very positive. So all of that makes makes for a bull market. That's what it looks like. In my opinion. But we'll have to wait and see. How the rest of it goes. Now, I wanted to bring up the chart of wheat, because that's one of the larger crops in the world that the U.S. produces, and there's other crops other countries that produce wheat also. But wheat stopped at the exact 61% retracement last week. When corn hit the exact 50% retracement, wheat hit the 61. Someone asked me a question: is why do I even refer to 50%? Because it's not a Fibonacci number. It is a Fibonacci number because it's 1 divided by 2, and Fibonacci numbers are part of a sequence of numbers known as sacred geometry, which are basically the square roots of 1, 2, 3, 4, and 5, like the 5 digits on your hand, the 5 senses, all that. So you take those 5 numbers, 1, 2, 3, 4, and 5, and the reciprocals of those numbers, and that will get you to the point where you can cover everything. What we try to do when we're dealing in the market is we only use 4. I use 618 and 786 for contracting numbers, and 1.27, 1.618 for expanding numbers. Now, the difference is that I do use 50% when you have an A, B, CD pattern coming at the 50% or the 382 level, then I will, I use that number, if I see an ABCD coming in at the 382 or 50%. But frankly, I'm really doing it because of the ABCD, not more of that than I am the 382 or 50%. But I will tell you this: if you have an ABCD pattern coming in at a 382, you're looking at one powerful pattern, folks. I mean, that's a very, very powerful pattern if you do have that pattern. And this is one of the things we're waiting for in corn, is to see if we can do that. We're also waiting for that, in the Japanese yen. We had a real interesting pattern that formed last night in the Japanese yen that I think you should really, if you follow these markets, like I do, you're always watching to see if you're going to be right on top of something, to see if you can get it. But last night, during in the middle of the night, it was probably around when London was opening, we made a perfect 61% retracement of the previous day's low to high in the Japanese yen, and that's a very low risk buying opportunity. It was down around the 87.80 level, and you're well over $1,200 higher than you were, and that's only taken just about 16 hours. So it hasn't really done very much other than go straight up from that buy point. And it was also a Gartley pattern where you had an ABCD coming in right at the exact 61% retracement. And the real beauty of this chart is, if you get a chance to look at it, and I'm going to blow it up so you can see it a little bit better, because this is the ideal situation for buying, is that after that 61% retracement came in, the market actually backed off twice in short moves that lasted several hours. It backed off to a 61% retracement and then rallied strongly and then backed off to a 61% retracement again and then, exploded to the upside. And now it looks like it's, going into that 90.50 to 9100 level. So these are things that when you're trading, you have to prepare yourself for, because we live in a 24-hour market. That doesn't mean you have to trade 24 hours. It's just that you should be looking at what happened, in London, in gold and silver and copper and everything else, and especially Forex, because London is the heart of the Forex market, and that's what you'll be looking for, is to find those those levels. And I did the same thing in the Japanese yen that I did with gold. And we have one other one that's spot on right now, and whether this is such a big cycle day today and tomorrow that it's going to be real interesting what happens over a period of the next 24 hours or so, because it's going to be very, very interesting on a longer term cycle basis, because we have a really big cycle completing now in crude oil. As a matter of fact, it's going through the 618 with a wide-ranging bar today, and that is something that we were actually expecting to have happen. And what I'll do is I'll put the daily chart into the Tiger TV to let you take a look at that. But then if we go down and look at a smaller time frame, you'll be able to see that the market was moving so very quickly with these wide-ranging bars that it gave you a signal that it really wanted to go a lot farther. But right at where we are now in crude oil is where we are in the S&P. I'm just getting the same sell signal, same pattern, different things, of course. But this is where I would be selling crude oil here at this 95.75 level, and I wouldn't risk more than about 80 cents on that, which would be about $800. I don't want you people to do this trade. What I'd like for you to do, you folks, I meant that in a generic term. I would like for you to just to look at it and see how the pattern works, because they don't work all the time. Nothing works all the time. But these patterns are very harmonic. They repeat over and over again. Dr. Lowe, in his book, The Non-Random Walk Down Wall Street, where he had 700 pages of exotic formulas proving that the market did repeat itself and did have the ability to have predictive characteristics because of this repetition. Well, I've known this forever as Mr. Gartley, when he wrote his book in 1937, did pretty much the same thing, that these patterns repeat over and over again, and that's what makes these things work, is the fact that they repeat and they are predictable within limits, and the key there is within limits. So the pattern in the crude oil is complete right as we're talking right now, and we just completed it in the E-mini S&P, and we'll look at that towards the end of the day because we'd be selling at around 70, I believe it's 1477 and a quarter, and the stop would be 1481. So whether it works or not, remains to be seen. It's just a probability, just like everything else. We got a call from John in Philadelphia. Are you there, John?
Larry, I want more people calling into your show. You're offering such great stuff.
Yeah, well, unfortunately, everybody falls asleep when I come in because I don't get to sing and dance like I used to. Tom won't let me do it, which really upsets my apple cart because that's my real strength.
Terrific.
What can I do for you, my friend?
Well, I tell you what, I can't agree with you more how phenomenal setups are occurring here in markets right in this time frame. You mentioned, of course, the yen and the gold, and I'll throw out copper at you and what have you, but I need to ask you to direct your attention, if you could, please, to something you mentioned last week, live cattle. Mm-hmm. On either the weekly or the monthly charts, it looks to me that maybe a 5-year bull market is topped, but I wanted to see if your work says that and what the implications, the next 6 months might be for that, please.
Oh, Johnny, be my friend and don't ask me to go out 6 months. I have a hard time going past 2 hours. I really don't. The guy that I'll have Rich Anderson on because he's far better at looking at the fundamental situation than I am. But on a technical situation, I can tell you that it does have the probabilities that it's making a major high up at that 137 level. We had that. In fact, you were the one that first started talking about the big butterfly pattern that was up there, and then we had the little retracement back, and then we've been down 10 days. We've dropped well over 8 cents in cattle. That's a lot of money in cattle. And where we are now is we're setting right at the 61% retracement of the year's lows. And we did that in a few days, so that tells us that we're probably going lower in cattle.
I thank you for posting that in the daily chart. I'm wondering if you have at your fingertips the monthly and what the Pesavento patterns happen to say about that.
All right, let me see if I can get the monthly up here. And the trouble is the data, I use e-signal data, and it is about as reliable as Santa Claus in Tel Aviv on the night before Christmas. So I can only go back about a year, so it's really it's pretty much worthless. I mean, it really has very little. You're basically just showing you that you've had a big. We got to take a break here, Johnny. Stay with me, okay?
Thank you.
You bet.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
John, are you there?
I am, Larry.
Let me tell you something. I've been in this business for 54 years, and when you post a chart like you posted in the Tiger TV, that really makes me feel good, because that is a perfect three-drive pattern on the monthly basis. And, the fact that we've come off 7 cents in a matter of a couple of weeks, we've made a major top in cattle. That's a perfectly symmetrical in time and price. My goodness, we could see cattle, drop 25-30% from here.
You've trained me well, Larry. I saw that chart and I was thinking of you. Let me just mention, you pointed out February cattle. In fact, is down today, but over the past 10 days, it's dropped, 7 cents, maybe 8. Here's what I can tell you, wanted to share with you and your listeners. Very soon, that February contract will expire, and the lead contract will become April cattle. And what I wanted to tell you is currently, as we speak, the April cattle is trading about 2 cents higher than the Feb cattle. Mm-hmm. So once my thought is this: at some point, you would think soon, this decline in Fed cattle runs its course, and you have a bounce of some sort. But then that will expire and be replaced by April, which will be 2 cents higher in price just from the get-go, perhaps in the next 30, 60 days, affording a fabulous, secondary high short sell opportunity. So I just wanted to tell you I'm looking at that.
Well, I think you're spot on as far as that, but I tell you, when I see a chart that is done as nicely as this one is done, you've mapped out the time and the price, and it's just wonderful. And if you go back and look at that same pattern, in 2008 we had the same pattern of 3-drive to a top pattern, and cattle dropped another 30% between 2008 and 2009. I mean, that's a really beautiful chart.
And very good on that. Larry, I just have to tell you, I'm looking at the E-mini S&Ps, and it's right up to that 1272 butterfly expansion you just mentioned about a half hour ago.
Yes. Well, we were looking at it at 1477, and, of course, I'd be taking profits at 1476.75, so at least I book a profit for the day. How does that sound? I make a $12
there you
50-cent profit on a 65. I shouldn't joke. That's bad. That's bad psychology. I will tell you this. If Mark Douglas was here, he'd hit me on the side of the head like the guys from NCIS, that's for sure. No, you can't joke about trading, but, it did hit the number. Whether it works or not, I don't know, but 1477 is a butterfly pattern, totally different than the one you posted in cattle, but that's a beautiful chart. I will use this chart if I can have your permission, because I think it's going to have some long ramifications of what could be happening, with the crops, because if cattle are going to drop, that means that there's going to be more grain out there because they're going to be feeding more cows.
Perhaps in the subsequent weeks, Rich Anderson can comment about that.
I'll have Rich on next week. I was going to have him on today, but today was a travel day for him, so I didn't get a chance to have him on because he can answer all of these questions on a longer term, basis. When we had him on last year, when we were looking at the pattern and we started talking about weather patterns, this was right around Memorial Day last year before the drought, he gave us a big tip-off, that we hadn't had a, dry situation in, I think it was 12 years, and that the moisture coming out of the Gulf was causing El Nino or something. I don't remember exactly what he told us, but he said all the things were there. Listen, that's the end of the show, John. I'll talk to you next week, okay?
Thank you very much.
You bet.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.